Hey, good morning, good morning, good morning. We have another updated $25 a week dividend portfolio where what is it? It's Saturday or Sunday, September 18th, the 19th. And yeah, as you guys can see, we are continuing to move in the right direction, which is forward and up. So if you are someone out there who's thinking about investing, but you're still a little intimidated, you're a little worried about it, not really sure where to start off, this might be, a decent place for you to consider starting, which is with a dividend portfolio, or at least having a portfolio that includes dividend stocks. That way, you're always going to be getting some sort of consistency with your cash flow coming in, despite us being in a good or bad economy. So right now things are fairly green, I would say, overall with the market. As a whole, ever since the Rona took place, things have kind of rebounded from there. But now we're getting to a place where things are starting to plateau as a whole. Yes, there's still a lot of growth, but there's also a lot of companies that are starting to just, again, plateau, level out, aren't really making as much growth as they were, 6 months ago, a year ago, and so on. So again, that's where having a dividend portfolio is helpful, is vital. Or if you're someone in a position where you have so much money, you don't really need to work as much and you can really get your money to work for you, and that will allow you to live off of your dividends alone. Those are kind of the two different scenarios why I think a lot of people consider having dividend portfolios or dividend stocks within their portfolios. With our portfolio, this is really primarily a dividend portfolio. It's not focused on growth. However, I am considering changing out a company like AT&T with a growth type of company that gives a small dividend. And the one company that really comes to mind is Apple, because everyone knows about Apple. Apple has been around for a while. Apple will be around for a while. So I feel like that might be a good company to add into our portfolio, and replace with AT&T, or potentially replacing it with an ETF or an index fund. So let's jump into it. As you guys can see, we have made some more progress from the backtrack of last week. Like 2 or 3 weeks ago, we finally hit $1,500, and then last week it kind of took a dive. And as you guys can see right now, the past day we're down $15, which is negative 0.99%. The past week we are down 0.90%. The past month we're down negative 3.12%. And the past quarter, we're down negative 1.50%, 50%. And then 1 year or all time, you can see we are up. Our return is 8.21% with a gain of $76.83. And of that, you can see our earned dividends is almost $30. We're getting closer and closer to that $30 mark, creeping its way up. It was beneath 15, then it was 20, and then it's progress, right? It's just like this diagram where you see it goes up, maybe it's going to level out, or maybe even take a tiny bit of a dive, then it goes up, take a tiny bit of a dive, and so on and so on. Right now, you can see things are starting to kind of plateau and level out, exactly like I was saying a moment ago. And that's where you're going to see the market gain start to decrease, right? But the beauty of a dividend portfolio is that you're still going to get your earned dividends. Of course, a company might slash their dividends, they might reduce that payout. So AT&T, for example, is one great example that we have in our portfolio where they are going to be reducing and cutting their dividends. So a lot of people have already jumped ship, and people continue to jump ship, especially because their previous CEO, and they were boasting about not cutting their dividends and things of that sort, and next thing you know, they cut their dividends. So that doesn't make an investor as comfortable with wanting to put your money there, because that CEO completely backtracked everything they just said, and it was all rubbish, and they told me my money would be fine here, my dividends, and so on and so on. Next thing you know, they cut that. So people are jumping ship, and it's other factors like that that are going to play a role with seeing the this little plateau that we have kind of taking place right now. But it is still steadily going up, and like I said, we are it has increased and improved and made progress compared to where we were a week ago, back from that backtrack of breaking 1,500 2 weeks ago. So things are continuing to move forward. They are continuing to move in the right direction. And again, we have stable, sound companies in our portfolio for the most part. Let's change this so we can see it from a gain and return perspective. So yeah, let's dive into our portfolio, see how everything is doing, how everything is going. As you guys can see, we are at the top with kind of the same few at the top, although we got Procter and Gamble. Sorry about that. Procter and Gamble has made some progress. I don't think they were in the top four last week. I believe it's kind of always like between our REITs and then like Pepsi and Coca-Cola. So of course, yeah, we have Newt at the top again, 25.63%. Then we have Pepsi at 19.56%, Realty Income Corp at 14.47%, Procter and Gamble at 12.49%, Coca-Cola at 10.11%, JP Morgan Chase at 8.11%, and Johnson & Johnson at 4.97%. Then down in the red in the negative, we have Verizon Communications at negative 1.92%, 3M at negative 2.65%, and AT&T at negative 4.46%. So as I mentioned a moment ago, we've been seeing AT&T down here for quite a while, and they kind of continuing to fall down, partly because of the changes within their corporation, working with acquiring or partnering with Discovery Channel, and most importantly, as I mentioned, them cutting their dividends. And I don't think it technically has taken place yet, but people are just still jumping ship and starting to, put their new investments inside their portfolio and making those changes now instead of waiting. And you can see that decline steadily taking place with AT&T, where I feel like it just continues to kind of go lower and lower. So, hey, that's the beauty of a dividend portfolio. We, are going to be relying on our dividends at some point. Now, not for quite a while because we don't have too much money in here. But if we were contributing $2,500 or $250 or much more than just $25 a week, these numbers would be much, much higher. And again, seeing anything, I mean, if you had your money sitting inside of a savings account, you're only going to get 0.1% or 2 or 3 or point whatever percent. Some, I have a digital credit union account. I love my credit unions, and they, give you like a really good percentage on your first $1,000. And even that's nowhere near 8.21%. So this is the critical thing that you guys need to keep in mind. I mean, we were basically twice as high with our return on this portfolio for quite some time. And that is really, really good, really good. But again, where we're at right now is still really good, especially when you're comparing it to a savings account. And like I mentioned, your savings account won't show you returns remotely close to this. So hey, if you're someone out there who is balling on a budget, maybe you listen to Dave Ramsey and you're trying to get out of your financial crunch. I believe in some of the baby steps, some of the approaches. I don't think the whole system, for example, their whole strategy is what everyone should follow per se. I think everyone's different, and oftentimes, there's a timing factor where it's like, well, the market happens to be doing really well right now, so this makes more sense to invest a little more or try to divert some of your money towards that market and benefit from it while it's green, and then you can go back and kind of readjust how you are allocating your funds, your money, and whatnot. But I really just think it's important for people out there to know that you can invest with as little as $1 a day, basically. I mean, there's really no excuse for anyone out there to be in a position where you aren't investing, right? Because we're doing it with $25 a week, and as you guys can see, we're making progress. This isn't a sprint, it's a marathon, right? And I know some people don't want to hear that. You want to get to the promised land like tomorrow. You wanted to be there yesterday. Hey, we all got dreams. We all, aspire to be here or there and want this, that, and the other. But you got to put in that work. And that's what this portfolio is allowing us to do. And it's just seamlessly pulling that money out of your checking account. You don't have to get in there and do it yourself. You don't have to follow it along. If you have good, stable companies that you're like, hey, I believe these companies are going to be around. You've done your research and you trust, the leadership there and whatnot, then you don't have to be checking your portfolio every day or every week, maybe once a month. maybe a little more frequently. It all depends what companies you have in your portfolio, how risky and volatile they are, but also your goals. If this is a long-term goal, then most likely you should be fine as a whole. But again, there's also the ETF route where it's a bunch of companies that are already, it's basically a portfolio being managed by others. So you don't have to follow it as frequently and as consistently and as much as we are, because there are others that are doing that. And you're basically, they get a small little fee, but it's taken care of for you. That might be the option some of you guys want to consider going as well if you haven't started investing yet. Not because you're saying, oh, I don't have the money, but because you just don't know where to start. That's something to consider. So I'm going to wrap it up there. I hope you guys found this video helpful as usual. We are continuing to move forward, make progress, and build our empire. And this is what it's all about, getting the ball rolling, starting, and just keeping it rolling. This isn't something that, is killing us. It's not putting a burden on my lifestyle. I can still continue to indulge in whatever I do and whatever festivities you do. It's a small fee, $25 a week. No reason any of you out there watching this aren't doing it yet. That said, feel free to invest more if you want. If you're comfortable and you're in a position where you can, investing more will go a great way, especially if you're younger and you have more time on your hands, because it's not about the timing, as they say, it's about the time in, meaning the more time you have in the market, the more likely you are to do better. That said, this ain't financial advice. Of course, do your own research, your own due diligence, and get investing, get trading. Stop making money, my friends. Get that money to work for you, because that's what it's all about: making money, managing it, and growing it. All right, my friends. So I got to keep it moving, but let me know what you guys think. Comment down below with your thoughts about our dividend portfolio and how it's going so far. Do you have a dividend portfolio? Who is in your portfolio, and who should we consider swapping out AT&T with? I've been asking this for quite a little while now, over a month. I haven't made the change yet, but I'm still interested to hear what other people are thinking about doing with their portfolio. Who we should swap out AT&T with? Do we want to go the ETF or index route? I'm open to your thoughts. So comment down below, like this video if you haven't yet, and subscribe to the channel. Hit that notification bell so you can stay up to date on our latest videos. And as I mentioned last week, I'll finally be rolling out some more videos very shortly, very soon, and on a consistent basis again. So it won't just be our weekly, Saturday, Sunday, updated dividend portfolio video, but we will have some more content helping you with making, managing, and growing money. But all right, my friends, now I got to keep it moving. But you already know, I'll see you in the next video. Peace.